Well, the Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, is here to give us his perspective to this policy. Thank you very much, Dr. Yusuf, for joining us on the program. Well, I'm sure you were watching that report on the need, Lagos State trying to bring in investors into the real estate. And just like I said in my intro there, you cannot talk about investment without addressing the issues of foreign exchange market, and here the central bank is trying to do that. So what's your take on this diaspora remittance policy that has just been...
Yeah, thank you very much. First, on the very important point you made about inspiring the confidence of investors, because no country is an island. We have to do business with other countries. We have to import, we have to export. And to that extent, and even when we talk about economic recovery, economic growth, expanding the GDP, it is very important to get that channel right. If you don't get it right, it creates a lot of distortions, and it creates a lot of problems for investors. Now we are talking about real estate. Of course, there's a huge gap in terms of deficit in housing, in real estate. And for that deficit to be filled, you don't have enough domestic capital to fill it. You need some kind of augmentation from foreign capital. Just as it is in real estate, you have such deficit in infrastructure and so many areas of the economy. And if there's any time we need such inflows, it is now. Not just for purposes of growing investment, but it's also for purposes of stabilizing the foreign exchange market. So coming back to the point you made about the circular on the diaspora remittances, I think it is something, it's a very good move. It's in line with what we have always advocated, and which many commentators have also advocated, because the whole idea is to move the exchange rates and make it market reflective. That is the basic thing. And that is the thing that can bring some clarity, some certainty into that market. Because what is happening now is that because of the level of uncertainty, lack of clarity, there is so much volatility in the market. And more importantly, is the fact that we have so many players in the market who are in the market just to take advantage of premium. Premium between one window and the other. So we need a policy that will eliminate these parasites in the market. Because they are the one creating all the confusion, the speculation, and all of that. So what has happened to the diaspora remittance is a very good thing. And the whole principle is that whoever is bringing in this flow through this diaspora channel will have the opportunity, first, to lodge the money in his or her domiciliary account, or to sell the dollar at whatever the market rate is, within the framework of willing buyer, willing seller. So that is good, but that is not the only channel. Okay. We have other channels through which these inflows can come. So our position is that we should extend this policy to other channels so that we can improve liquidity in the foreign exchange market.
Now, when you talk about other channels,
yes.
Now, what other channels are you advocating?
Now, first, we have the export proceeds. I can tell you a lot of exporters are complaining a lot about the current exchange policy around exports. It's a major problem. And if there's any time we need to encourage the exporters, this is the time. Because we need people to export and bring in foreign exchange. We should not put a policy in place that will discourage them. And what am I saying? The policy that is currently in place is that when they get their export proceeds, they lodge it, and this exchange at about 386 naira.
That's very discouraging.
It's very discouraging for a country that is desirous of growing the non-oil exports.
So why can't they extend that to, this policy to exporters?
Of course, that is what we are hoping and praying for. And we are hoping that the CBN will do that. Because now there has been a whole lot of confusion around NXP. NXP is non-export proceeds form. Because when there is a problem with policy, when there's a problem with the quality of policy, there will always be a challenge with compliance. When there's a challenge with compliance, then you dissipate a whole lot of energy trying to enforce that regulation. That is what is happening with the NXP. In the last 2 months, if you know what exporters have gone through on issue of compliance with NSP at the ports, some of them have been at the ports for 2 months. Some of them with cargo that are perishable, just because they were trying to enforce the NXP. And in the process, some of the export cargo had gone bad. I haven't got a report of 1 or 2 containers that has to be returned. Because by the time you sort out all these problems with the shipping companies, with the CBN and all of that, by the time you now onboard the cargo, by the time the cargo gets there, the cargo has gone bad. And those that had not completely gone bad, most of those cargo had deteriorated in value, just because of these complications that this exchange rate policy has brought on the exporters. So the point we are making is that the policy that the CBN has put in place for the diaspora remittances should be extended to export proceeds, so that whatever proceeds they get, first, they should have unfettered access to it. If they want to lodge it in their domiciliary account, they should be allowed to do so. If they want to sell it at a market-reflective rate on a willing buyer, willing seller basis, that should be. And that will go a long way to help the liquidity in the foreign exchange market.
Aside from the export proceeds, what other?
Well, we also have we have the capital importation. If you look at the capital importation data, the thing has been declining. And why will you bring in your capital into a country where the rate you get for the importation of the capital is far less than what is perceived to be the market rate? So we have people who are, in the FDI window who want to bring in foreign exchange. We have the foreign portfolio investors who want to bring in foreign exchange. If they are allowed to bring it in at a market-reflective rate, it will boost liquidity in the foreign exchange market. We should not impose rates on them. We should allow the market to play. Initially, we may have issues of the exchange rate depreciating, but with time, it will stabilize and improve. Look at the impact that even this diaspora remittance circular has had. Before the circular came out, exchange was already going to the threshold of almost 500. But with the relaxation and the liberalization of that window, it brought some calmness to the market.
So you think if these other segments should be added to this, perhaps we could see the Naira strengthening further?
There will be a lot of improvements, a lot. Because the whole idea here is not to just be focusing on only oil. There are other, if diaspora remittances can fetch us over $20 billion annually, that is a lot. The FDIs or the portfolio flows too can bring in quite a lot. They can give us close to $1 billion monthly. Then we have things like even some of the government agencies. We have the IOCs, the oil companies. They also earn a lot of dollars. But we need to encourage them to drop the dollars in this market. If you continue to impose a rate that is not reflective of the market, they will not drop it.
Now,
and if they are dropping it, they will not drop it sufficiently enough.
There was this issue of dollarization.
Yes.
You remember that was why they said, okay, if you get in this dollar, you have to take it in Naira just to avoid this dollarization. Do you think, because I think that was the reason they stopped it in the first place. So that didn't quite help. And do you see this also bringing about this issue of dollarization of the economy?
No, certainly not. What we are dealing with here is the exchange rate management question. It's not dollarization. We need the dollars, and we need them to come in. That is the strength of an economy. When you are able to attract foreign capital into your system, it helps to boost the growth and the GDP. What we are saying is that we should have policies in place to ensure that we encourage those who want to bring in the dollar legitimately, of course. I'm not talking of money laundering and all of these things. Of course, there are safeguards for that. But we should encourage them to bring it in and exchange it. It's not dollarization. Dollarization is if you continue to now engage in transactions in dollars. And it is, some of these problems can also even lead to that.
Yeah, that's
if the pricing
point,
of the currency is not right, you could push people to say, okay, because this naira is not, we can't rely on it, then we have to do our transactions in dollar.
Okay.
So allowing a market reflective rate will reduce the risk of dollarization that you talk about.
Okay, let's look at the issue of inflation rate. We've seen that skyrocketing, and financial derivatives think tank now is projecting even a higher inflation rate before the year ends. Do you see this policy helping to tame inflation, particularly imported inflation?
It will help, because this economy is highly exchange rate sensitive. We are highly import dependent, unfortunately. And that's a function of our production capacity. It's a function of a whole lot of things. But if you allow the expansion of the scope of market reflective exchange rate policy, it's going to calm down the market. It's going to reduce some of these volatilities that we are seeing in the exchange rate. It's going to, make it possible to remove all these parasites that are in the market because of the premium, all these rent seekers. They are all over the place. And this policy is breeding a lot more of them. And it's creating a lot of distortions in the foreign exchange market. So if we do that, it will help to bring down, strengthen the currency. If the currency is strengthened, of course it will impact positively on inflation.
And so how...
So we're likely to see a reduction in prices because some of these imports and things like that, their prices will go down a lot more.
So, I mean, let's talk about the AFCFTA.
Yeah.
Of course, that is taking effect January 1.
Yeah.
Now, looking at this policy, and if we have to have the naira falling, how is that going to be a boost for Nigeria to actually take advantage of this deal?
You see, in the literature, economic literature, when your currency is weak, it gives you an advantage in the international market. Because whatever you produce, unfortunately, we are not producing much. But whatever you produce will be very competitive internationally. That is the more reason I'm worried about the exchange rate policy around the export sector. This is a very good advantage for them. By the time we have the AFCTA, apart from the structural problems that we have that may impede productivity, production, real sector competitiveness, and all that, ordinarily, it's a big advantage for us. It will be easy for us to overrun quite a number of countries as far as whatever is produced here or whatever things we have here is concerned. Because the exchange rate is weak. And there are even some countries, particularly in the Asian area, that deliberately weaken their currency in order to be able to boost their exports. And it has really helped their economies. Although the argument can be that, well, we don't have much to export, but we have to begin from somewhere to encourage those who are already in the export. So if you have that within the concept of this AFCTA, I think it will help. And for us to also play very well in the concept of the African Continental Free Trade Area, we also have to get proper alignment of our exchange rates. If you continue to have this confusion, it's going to create problems for us within the African Continental Free Trade Area, because we are not talking about international trade. And the beauty of international trade is for you to have seamless transaction, currency-wise. That is important. We need to get it right in order to get good value from the African Continental Free Trade Area.
Well, I guess it's about one step at a time. Yeah. Hopefully, the central bank will, of course, consider these other sectors. And I'm sure it's a case of monitoring, okay, how has this one worked out and all that. And you are an advocacy person, so you continue to advocate and continue to have words with the policy authorities.
We have to.
It's always a pleasure to have you on the program, Dr. Yusuf.
It's a pleasure.
Thank you, and enjoy your weekend.
Thank you.